Joining the conversation all morning long, Lloyd Financial Group CEO Luke Lloyd and Washington Examiner columnist Tiana Lowe-Desher. We're alone, Luke. We collected back-to-back record-breaking revenues. That was just $62.6 billion in 2 months.
Well, what I find interesting is you just said $215 billion in tariff revenue on that shot there. We're on track for almost $300 billion, call it probably, for the end of this year. Yeah. That's basically on par with last year's deficit with China, the $300 billion trade deficit we had. And Trump actually hit the nail on the head. There's a bigger plan that he has with this. You know, when it comes to getting international countries to invest in America, what that does is drives the U.S. dollar up. That strengthens the U.S. dollar that's been very weak so far this year. We need the U.S. dollar to remain strong, and a couple reasons for that. One of the reasons I think Trump administration's all for is to get interest rates lower. You mentioned the 10-year Treasury at below 4%. Yeah, if that goes lower, that's actually better for middle-class America. So there's a longer-term game plan here. It's not just about trade revenue. It's not just about national security. That's a big part, but it's also for the long-term strength of the U.S. dollar while China is trying to get other countries to trade in the yuan.
Yeah,
very interesting thing there.
And we knew, Tiana, there was the 10-year, which we referenced at the top of the show, Luke.
Well, that's exactly just goes with my point I brought up a few seconds ago. If I said this actually a few months ago, actually probably 9 months ago now at this point, when Scott Bessent was basically in talks with being named Treasury, their sole goal, if I had to pick Scott Bessent's sole goal, it's to get the 10-year Treasury lower. Because again, we live in this debt Ponzi scheme. The only way the Ponzi can continue to run is for interest rates to go lower. And that's beneficial for smaller cap companies, beneficial for those tech companies that need to borrow money to grow. It's beneficial for the AI revolution. I mean, it's so important for that 10-year to get lower, and it's happening.
And in fact, before we go, Luke, I do want you to get in. And what's your take on all of this right now, Luke Lloyd?
Yeah, so I think the 10-year, again, being lower, every inch that drops, the more money is going to come out of money markets. Trillions of dollars and go basically into the market because they're risk-free 4%, may come down to 3%. It gets a lot less attractive. And then one thing you did mention before is private credit. And there's so much liquidity in the system, and this whole system was built a lot by private credit. Low debt, low interest rates. And there's a lot of similarities right now to 2006, the liquidity in this system, and that is making things rock and roll all around. And frankly, allowing, we talk about in our newsletter every single morning, the liquidity is what the most important thing we need to track is, because if rates go lower, that's just more liquidity pumping up asset prices.
It really is. Accusations made by Democrats who were just out to get him and wanted him
weaponization.
in jail.
Weaponization.
You know, yeah.
And when you, look, I hate to virtue signal here, but when you come from small town, Martins Ferry, Ohio, my office is in Union, Kentucky, small towns. People are getting very irritated with the political theater at the top, the lying. What can you believe anymore? I mean, it's very frustrating for those small town hard workers that, you know, are just trying to get ahead in life, and they can't actually do that because you have all this back and forth, what's going on at the top, and you have all these things going on. And then you combine that, and I hate to bring AI into this, you know, with the whole AI stuff. What can you believe anymore? It's very frustrating for those people.
But really of life for their own constituents.
Well, I know this is the CEO of immigration I'm talking about here, but I saw in one of the articles I read this morning that he says that these raids don't make anything, or they don't make it safer. They don't make anything safer. Of course it makes the place safer. That's why we're doing it. We're making sure that we're following the rules. I mean, look, my wife texted me yesterday, I got a speeding ticket for going 7 miles per hour over because a camera, which is unconstitutional in Ohio, by the way, to get a speeding ticket through the camera, I have to pay a $120 fine. It is, but apparently I'm going to pay it because apparently they can send it to collections or something like that, so I'm going to pay it. I got to follow the rules. If you don't follow the rules, you get consequences. Why are we allowing people that commit consequences to protect them? Yeah. I mean, it just sets a bad precedent for the future, our future kids, my future grandkid, whatever it be. Like, it's ridiculous to this point. It's crazy we have to talk about this on a daily basis because of this, right?
Yeah. Cox was on with us earlier, and he said he's kind of questioning the data a little bit. The quality of the data is what, exactly. It's what he told Luke and I this morning. He said, well, we'll see.
Yeah, I mean,
that could be a problem.
I mean, I think a lot of people are paying attention to it because everyone's still waiting for that tariff inflation that we haven't seen. And I don't expect that to come any point in time. And I've been outspoken. I think all of these tariff rhetoric and anything that, you know, Trump is doing at the end of the day is really a lot of it's disinflationary besides some of the government spending, which I actually have a lot of thoughts on.
Yeah, well, I want to get your take on Amazon because they're going to replace about 500,000 jobs with robots. These are reports that are out there that they're aiming to automate 75% of operations corporations, that would make them avoid hiring 600,000 workers over the next few years. And that is with their sales expected to double in the next decade, well, 8 years or so. These robot warehouses, like the one they've got in Shreveport, Louisiana, already cutting down headcount, and they're planning to expand that model across 40 facilities by 2027. They say it's going to be more efficient, understood, but that's a job problem.
It is, and that whole AI rhetoric, robot rhetoric, it's all disinflationary as well because when you don't hire new people or more people, obviously that money in the system goes down. But look, there's a couple takes here. I'm actually in the camp that initially the AI replacing jobs, which it will, and I've been outspoken that AI is going to replace more jobs than it's going to create. I don't see any world where it's going to create more jobs than what it replaces. But in that environment, corporations make more money, they become more profitable, the margins go up. That's all good for stocks. So not only do you have AI efficiency, AI productivity going up, you have deficit spending going on in the government. I relate a lot of liquidity in the system to 2006. We talked about banks back then, now it's private equity world. And I think with that kind of mentality, you look back to 2006, gold did very well for a couple of years, stocks did very well for a couple of years until that bubble kind of did burst a little bit. That bubble will burst here, but that liquidity is going to remain strong. It's going to pump up a lot of those AI stocks. Amazon's actually one I stay away from. It's been a laggard and doesn't have as much momentum as others.
Yeah, it was his press secretary, but he was fine. She didn't see any issues. Like, she's done that more than once now in this book.
It sounds like she's trying to push DEI for the presidency. I mean, I'm part of an organization in Kentucky called Americans for Prosperity, and we talk a lot about merit base, and we talk a lot about meritocracy, like just being their qualifications, working your way up and actually being qualified. I mean, look, this is a playbook out of how to be president, in my opinion. I'm not saying I know nothing if she's trying to run for president down the road, but, going on the book tour, going on the media tour, all that stuff, making her own personal brand out there, talking about how she can't see herself being president. All of that seems to be a playbook out of her running down the road. And frankly, her qualifications. Look, I'm just saying, I think she's more likely to get elected maybe than Kamala was. I'm not saying anything about that, like I'm supporting or not supporting, but I think that's very interesting.
I don't know to end.
Yep.
In the Biden presidency, and they just kept getting extended because I don't know, when people see free money like Chuck Schumer, and by the way, that is big for New York State. He's looking at his own state.
This is out of the playbook of the art of the deal. I mean, I talked about how art of the deal applies to China tariffs. Art of the deal applies to negotiations in Congress. The ACA enrollment, like you mentioned, starts November 1st. They're trying to reach an agreement by November 1st, or the premiums increase. SNAP benefits end by November 1st if a deal is not reached. So that impacts a lot of people that are mainly probably Democratic in nature a lot of ways because they are living on some of those benefits that the government gives out. So this is in the Democrats' court, and they have to make a decision quick.
Yeah, you say that. Luke Lloyd, jump in here. Do you agree with that take that a little bit of a pullback, a cool down is all right?
Yeah, it's absolutely all right, and it's absolutely healthy. And one of the topics we were talking about earlier is I think someone called Trump the most socialistic president. He actually inherited the most socialistic economy with all the deficit spending. And what's interesting is you look back to 2006, I think there's a lot of parallels with liquidity in the system to 2006. Back then it was banking liquidity, and then now it's kind of the private equity kind of world and conversation. So I find it interesting. Back in 2006, deficit spending was like $200 billion. Now it's almost $2 trillion. And Trump actually got that down 4% year over year, which is very impressive, coming down a little bit. So all of that liquidity in the system, David, in the path of rates going lower, do you see any world where liquidity comes out of the system at any point in the near future? Because when I hear liquidity, I hear stock prices going up.
Something that you wrote about this morning was the Amazon, the AI job prediction that there are going to be less jobs.
Well, I've been getting more questions about it from my younger clients. I mean, majority of my clients are in the 60s, 70s, and 80s. They're kind of retired or about to retire, but they're not as worried. But they're worried about their kids, or my 35-year-old clients are worried about it. So we wrote about it in the newsletter this morning, and here's my take. Like, let's use Amazon as an example. I think 140,000 jobs are in the AWS section. That's their growth section, right? The package, they actually barely don't make much money actually on the packaging and shipping side of the equation. They have 1.5 million total employees. So what I see happening is more robotics on the packaging, shipping side of the equation, more hiring maybe in the AWS side. So what I think from the long term, you have two perspectives here. The short term is these companies are going to hire more software programmers to develop AI. So it's going to create new jobs initially. But in the long term, it is meant to replace your job. So you have to learn how to adapt. If you're a younger person, you have to learn how to use AI. My mom's a school teacher. She's worried about ChatGPT with all the tests. I'm like, Mom, be worried, but also allow them to do some stuff. stuff because you have to show them what you can do so you can be productive in this next world we're going to live in.
AI is not going.
I like that.
I will say it will become politicized. UBI will come into the equation down the road. Conversation. If it starts to replace jobs, everyone on the left's going to say UBI.
Maybe Bernie Sanders could talk about job losses at Amazon to his friend AOC, who killed that Long Island City Amazon facility project a couple of years ago. Yeah,
Florence, Kentucky.
Thanks a
Us
lot.
in Virginia, we're the beneficiaries of it.
Florence, Kentucky just built an Amazon plant, and I'll tell you, traffic got really bad, but the place is building up.
It's economic stimulus. Modernize technology, revamp leadership, and explore a possible sale of Six Flags. What's interesting about this is that Scott Ostfeld, who's with a managing partner at JANA, he told the Wall Street Journal, he said, investors in Six Flags have been taken for a vomit-inducing ride. Mic drop. Your thoughts?
That's funny. Travis Kelce went from catching passes to now catching loops, I guess, at Cedar Point. That's where I come from, Cleveland. I'm looking forward to seeing these advertisements. Like, it's kind of like the Gronk spike. Like, I can only imagine what Travis Kelce's about to do to light this up. It's going to be great from a marketing standpoint. As you know, marketing drives results, and I think this is a good deal for Six Flags.
I love the ticker on this one, fun, FUN. So, but you know, I mean, we all grew up with Six Flags, but the truth is, I mean, yeah, they're talking about that, you know, some of it was bad weather, but attendance at their theme parks has been severely down this year. They've had a really rough year, and the stock's taken a big hit.
Yeah, I mean, we know that COVID, there hasn't been the proper recovery from COVID in terms of the margins of a lot of these companies. And also, Disney has gotten a lot of flack for pivoting wholly to the luxury market, right? Mm-hmm. I'm from Southern California. Going to Disneyland, especially if you lived in the area, was supposed to be something that a middle-class family could afford to do every once in a while. Still not cheap, but something that was within the realm of middle-class family could do it. Mm-hmm. They can't do it anymore. There is a great avenue here for Six Flags to be known as the national brand that is just as fun, but not incinerating all of its money on the streaming and on the woke and on the luxury for the 1%.
They lost $319 million in the first half of 2025. To be clear, Travis Kelce said on Instagram, he said, I'm a lifelong Six Flags fan. I grew up going to these parks with my family, my friends. To help make Six Flags special for the next generation, I could not pass up this opportunity.
I can just imagine
him put the money in.
I can imagine him just putting his hands up on a roller coaster ride, having fun. Yeah. Again, looking forward to seeing the advertisements. But I will say, Travis, watch out for my Steeler fans or my Steelers over there. Aaron Rodgers. I'm pretty happy with the results, except for Cincinnati last week. I'm excited to see what happens.
Who saw Aaron Rodgers coming this year? That was not on my bingo card.
I did. I called it from the beginning. My father said you're an idiot, Luke, but I was right.
Aaron, retire.